Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York. Friday, finally the 25th day of May, and this is the daily report for gold and silver, our weekend review. And what a week we saw in the market. We had a nice finish in gold today, closing up almost $16, $15.90. As you can see, close for the cash market, $15.74.70. That's according to Kitco. My screen showing it at 72.53. The low was 15.51.70, high 15.75. Silver up about 21 cents. The low 27.86 and the high 28.71. You know, I talked about briefly the fact that we might in fact have a double bottom forming in the market, and I think that really next week is going to be a very, very telling sign as to what we see in the market. Now, why is that? We've got a ton of economic data coming out, and the key is this. It's all about, in my opinion, whether or not gold can continue to hold this 1520 area. Because if it can hold this 1520 area, in other words, if in fact this becomes the double bottom that we talked about last week a little bit, we talked about it again yesterday, then I think that this market has a real opportunity to move up and probably to test as high as 1620. This 1620 area, as you can see, has got a little bit of resistance, and that's the resistance that I want to see it overcome, which are these series of lows right here, and of course we had some intraday lows here, and you can see that when it broke below there, how quickly and how hard it broke. That is that compression triangle. That's where that apex came in. Now, that's the positive side of the fence. On the other hand, depending on how this economic data comes out, if it breaks through, because we're at 72 here, if it breaks through this 1520 area, I fear it will probably head back to the real support level, which is around 1463. Well, where will it go? No one's really sure. We've got to see what is going to happen with this economic data. Now, of course, on Monday, our markets are closed. There will be no report unless there is some very, very strong activity. But normal trade will resume on Tuesday. And because of that shortened trading week, we've got some real strong information coming out. Most importantly is going to be the unemployment data for May, and that's going to be released on Friday. And, you know, whenever we talk about the jobs figures, it's really an important number that we tend to follow, and it is also something that is going to give us a determination of what's going to go on in the future. And that, besides the FOMC meeting, and that meeting won't come up till June, those to me are really the really key economic reports that we want to listen closely to. I've gone ahead, I've put up our Fibonacci retracement, and what I would be looking at, and this is in the instance that it did not hold. Personally, I think it probably will, but if it did not hold, we would be looking at 1443 as the next real strong support level, and it would all be within, as I said, this band right in here. Now, as I just said, it is my personal sentiment that we probably will see this 1520 area hold. I absolutely believe at this point that this is a very, very critical number. I believe that it was tested right in here, it was tested right here, and it absolutely held. Will it hold? Well, that's going to be determined by some of the economic data that comes out, but my sentiment right now is that this is probably going to be the bottom of the gold market, and I think that we're going to see higher prices ahead. There can be no doubt about that. That's my sentiment at this point. Now, silver also showed a little bit of resilience, but we had a very, very volatile week when we take a look at the kind of trading activity that we saw, because we had this market test below $27. You can see this low right in here. Okay, this is a daily chart. Now, from below 27 and just at 27, here's the open right here, you can see that within 2 days trading time, it managed to come up, go over 27, and actually test $29. However, 3 days later, we had the market come back down and test 27. It gave back almost all of the gains that we saw, and then over the last 2 trading days, we've seen it move back up to where it's closed today at 28.50. Now, the key to me on this particular market right now is the candlestick pattern that we can identify. It's a simple 2-day pattern, but we did get confirmation of it today. And the pattern that I'm talking about is a candlestick pattern. It's a simple one called an engulfing bullish. An engulfing bullish is simply defined as after the market has been in a defined downtrend. We can say that. There's no doubt about that. This market has been in more than a defined downtrend. But after it's been in a defined downtrend, you get an open at, because this is the cash market, a close above, so it totally engulfs the prior day's trading range, as you can see right here, and this is that 2-day pattern, the engulfing bullish. To take that particular call, you need to get confirmation. Confirmation would be the candle on the following day. It needs to have a higher low and a higher high. It also needs to be a green-bodied candle. Now, it is a small-bodied candle, so it's not the strongest of confirmations that we could have gotten. But when we take a look at the market here you did get a strong confirmation, but the follow-through was to the downside. So we'll have to see how the market reacts at the beginning of next week. Again, Monday is a holiday. Our next report will be on Tuesday. For those that observe Memorial Day here in the United States, I wish you a happy Memorial Day, and we'll talk to you on Tuesday. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Tuesday for another daily update and review. Bye-bye.